Hello, and welcome to yet another episode of Life as It Should Be. Uh, it comes after a gap because I was in India doing my religious tourism. So, without further ado, let's start the episode. So, today our topic will be wealth. Many of my friends have been asking me why I did not start with wealth because that's one of the hottest topic that we keep discussing day in day out. But as I said, in terms of priority, it's always relationships and then health and then wealth, right? So why wealth comes after health? It's a no-brainer. No matter how much money you earn, if your health is not supporting you or you are not in your right spirits, you would end up spending a lot of wealth just to recover back to base zero, or worse, you just die out leaving all the money that you earned for someone who doesn't even care because he has not worked equally hard to earn that amount, right? So yeah, relationships and then health and then wealth. Yeah, so let's jump onto the wealth topic. So what's the most important thing you should do when you start on your wealth journey, regardless of your age, right? So could be you've been too busy with your life, just going in an autopilot mode, and then you realize that you have to start your wealth journey now. Could be you just completed your studies, entering into the job stream, or starting your own business, and you would want to start your wealth journey ASAP. Gen Zs, yeah, but most important thing to do when you start your wealth journey, regardless of your age or the stage of life you are, is to first unlearn. That's very, very important, and hardly anybody tells you about this, right? So you need to unlearn what you have observed all through the years, unless you have born and brought up in a corporate house or somewhere where people do business in and out, and not an employed family, or do not have those fiscal disciplines, right? So most important thing you have to do, the most important thing paramount, is to unlearn, right? So there will be people telling you that stock market is a casino, it's similar to gambling, nobody wins, all that. Unlearn. Yeah, so if you treat it like a casino, yes, the market will be a casino. But if you treat it like your best friend, take care, take it up as a goal, learn similarly the way you have learned your education all through the school, then college, then university. If you give it that much of time and care, by all means, the stock market is here to support you, to enhance your wealth and get those goals realistic, help you to meet those goals. Yeah, so first thing is to unlearn, cause I think every 20 years the information that the generation wants to pass you could have been outdated, no more relevant, or have been replaced by better rules. And just like technology, with the wealth, game changes very rapidly before you know, right? So when I was growing up, I know that stock market was for a privileged few. Not many people knew what stock market is. And then within that, what are the good companies? How do you open your demat account? Hardly, right? So by the time I was entering my work stream, 2003, 4, 5, those years, I knew that we need to open a demat account. What are the steps taken to be then? But then again, nobody told us that there's a disciplined way of investment. Once you put your money, you need to have a lot of patience. It doesn't, start giving you returns from the next day now that you have put the money. Yeah, so a lot of things to unlearn. Not that your parents or your grandparents or your uncles didn't mean the best of for you. The intent has been there, but as I said, rapidly evolving technologies, rapidly evolving real estate when it comes to wealth. Yeah, now what do you need to learn? Again, it's this generation talking to you. Maybe it's outdated, but what we know, we can share only our base, right? So first thing is, outside of home loan, as much as possible, do not take any new loan. Yeah, outside of home loan, as much as possible, do not take any loan. Specifically, when you are considering taking a loan, always think whether the value of that whatever you are going to buy or invest in is going to remain same or increase as the time passes. If it's a diminishing asset, please do not go for a loan to buy that. You can always wait. Yeah, so as much as possible, no loans. Yes, there will be valid reasons when you will have to consider taking loans. There are banks available. You can start taking loans considering your emergencies and all. But if you were to decide that you will take a loan from your near and dear ones, please always make sure that you return it to them as soon as possible. Yeah, money, and more specifically borrowing, is a sure short case of bettering the relationships that you had. And believe me, relationships are much more important than money. Yeah, so outside of home loan, if you have any loans, and god forbid credit card loans, please cut your spends, save more, and close the loans ASAP. You will be surprised how much you start saving once you have closed those loans, right? These are those silent killers which do not tell you, keep on compounding the interests on top of it, and then you end up paying way more than what you had borrowed, and even the assets value would have come down, depreciated, unless you have bought a land or a home. Yeah. Second thing is, people say about savings, people always say you should have 6 months, 3 months, 9 months of saving in a easily accessible account. Debatable. I don't believe in that. I mean, at least in the market I am, the balance transfers and personal loans are easily available. So I do not see merit in keeping cash available. As much as possible, I keep my money invested. If I sell a stock, if I invest in a stock and I need some money, I would take a balance transfer or a loan. If possible, negotiate a early repayment term. Then if I get any stock which is good position to sell, I would just sell it off and then close the loan. But as much as possible, I would not want to keep an emergency fund. Yeah. People say that health situations might happen sometimes without telling you, so it's very essential that you have emergency fund. I'm sorry, I think you should have an insurance more than a emergency fund, right, to take care of your health emergencies. Insurance is a must. I told in previous episodes as well, right? So yeah, that's about emergency funds. I don't believe in that, but if you go by the majority opinion, you should have 6 months, 9 months. Even if you would, I would strongly recommend 3 months is too much. Yeah. Next, if you still have enough money and don't know what to do, you're just begin your wealth journey, start with fixed deposits, right? And if you have a senior citizen in your house, and if possible, if he is not saving anything, you can save it through him to get tax benefits. Specifically इंडिया वालों के लिए बता रहा हूँ, अपने मम्मी पापा के नाम पे लगाओ fixed deposits, it's tax free up to 12 lakhs, you know that, right? So I think for everybody, but for senior citizens, the slab rate is higher. Yeah, so fixed deposits. Now, for somebody who has saved in for an year in fixed deposits and now has that discipline of saving, you should strongly consider going into mutual funds or ETFs. Educate yourself. It takes hardly 30 minutes, 1 hour if you go through ChatGPT or Gemini or any of your personal bots. You will know what it is. But if you do not know, reach out to an agent, tell him, and start investing in index funds. Yeah. Or as you continue to gain more knowledge, you could go into sector specific funds or growth or equity, whichever way you want. And once you have 2 years or 3 years of comfort in funds, when you have seen those cycles, Nowadays, yeah, 3 years is too much. It keeps going up and down like there's nobody's business, right? And there's a specific country which makes sure that the market is as volatile and as active as it could be across the world. Yeah. So in 2 to 3 years, if you have seen one downturn cycle, so you are out of your nervous zones, that's when you can start entering into actual equities and see if you would love to invest, right? So there are, of course, there are investment plans also. You can reach out to some of the investment houses. They could help you. They guarantee at least a 12 to 13% rate of returns. In India, I'm saying, in Singapore it's minimum 6 to 7% is what they guarantee, and they pay you, the payouts are almost on a monthly basis. So that's when you graduate from your fixed deposits to, I mean, keeping in casa is a sin, guys. So far I know. Yeah. So put in those link plans. Some plans ask you to lock your money for a certain number of years. So just make sure you know the terms and conditions very clear. Once you have logged and 2 to 3 years of time, when you start understanding stocks, you start wondering, why did I lock my money for 10 years, which gives me only a 7% rate of interest? But if I would have invested in a Tesla or Nvidia, it would have given me 7% within 1 month. Believe me, if it gives 7% in a month, it will take away 14% in a couple of months as well. So stock market is a game of patience. You need to trust the stocks. The stocks have no love or hate for you. They don't even know that you have invested in them. So is the company. So please, as much as possible, buy low, sell high. There are enough number of indicators which will tell you the way the stock is trending. Initially, I would recommend you go for index ETFs or index funds till you gain some comfort and till your heart rate matches the way the volatility of stock market happens. And then out of index, you could move into the Mag 7s if you are investing in US. So you can go into Metas, Microsoft's, Nvidia, Amazon, and so Google, so on, based on who is your favorite company. All these are staple companies where we mostly use them in our daily lives. Yeah. If it's in India, you can invest in Reliance, no brainer. The banks, the big banks, SBI, HDFC, ICICI. You can invest in commodities. You can invest in agriculturals. You can invest in chemicals. I mean, India does give you a lot of varieties. It's not only tech, it's not only banking, it's across. And each of the sector has at least one or two behemoths where you would love investing. And currently they are at a premium available. If you just buy and forget for 5 years, I mean, you can't imagine the amount of returns you will get, right? So those who want exposures outside of US and India, Africa, Spain, Korea, these are the markets also expanding. If you do not have in-depth knowledge of those, you could just buy their equivalent index ETFs, the EZA, EWA, EWYs. They give good returns as well. China is another exciting market. So you can look at SE, you can look at JD, you can look at Baidu, Baba, so on, so many, right? And they are at their absolute lows. So if you are buying in next 1 week, forget for 1 year, you're gonna make a good return, right? Again, do your own research. Don't go by my recommendations. These are some things that I have already bought, and I am sitting at 5 to 6% of profits already. I've not yet decided to dispose them off, but yeah, I'm already sitting on them. Then after that, you could go into structured products where there are companies which offer you a basket of stocks similar to funds and all, and they promise you a certain rate of interest for a year and a half. Go through the terms and conditions, you will get into it, but those require higher investment. So once you have made good enough money in your fixed deposits, followed by mutual funds, followed by stocks, that's the next step you can take towards structured products. Get into futures. I would not recommend options unless you are very careful about it. So if you really want to get into options which do pay significant bargain on what you compared to what you have invested. Do not buy near term options. Ensure that the expiry is at least 3 to 6 months, so that you get to see the cycle of that stock and then able to exit at a price which, you know, maybe 10 or 20% higher than what you have purchased. Based on what's the beta of the stock, right? If it's too volatile, yes, 6 months is good enough. If it's too sluggish and it's a seasonal one, then you identify what the months when it spikes, buy the uh, options closer to that, right? And types of trading, you know, I mean, you can go through any other senior techie podcast who is into trading for billions of years, who will tell you. But net intraday, you buy today, sell today, and then there's a swing. You identify high beta stocks or seasonal stocks, and then you know exactly when to enter and when to get out. Long term is something like you set up a goal, you know how much you are expecting from the market, so you just start investing a specific amount of money every month till you meet your goal. Once you meet your goal, promise yourself you will just get out and don't get greedy about it. That's long term. Long term goals could be 5 years, 10 years, 15 years, 20 years, and it could be retirement as well, right? So think about what long term means to you. What are the goals? Fix up those goals before you start your long term. A long term investment without a goal doesn't make sense. Yeah, people ask about real estate, gold, etc. Real estate, you know, you should buy when the place is upcoming, you know it's gonna have a high demand. Buy when it is ready to move in. If possible, look for gated communities where you can buy independent land and keep it with you, not necessarily have to build something. But always remember, are you buying a house for yourself or real estate for investment? If it's investment, highly recommended to go for a land within a gated community where there is guarantee that it won't be, you know, picked up by wrong folks, and it's for yours to keep. Even if you have to pay a tax without constructing anything for years together, doesn't make any change to the plan. Keep the land. If you have to buy a house, at least in other countries, go through the agent when you are renting it out, so that the agent can take care of the upkeep of the house in case the tenant decides to screw up with your house. At least there is a contract which protects you. In India, highly recommended not to go for a flat and then renting it out. Yeah. Gold, again, as much as possible try to go through ETFs which back it with the gold, physical gold if possible. They are a bit expensive, but you know, makes sense. Buying physical gold beyond a particular amount, please do not buy physical gold. That amount again varies from house to house and what you have, home to home, family to family, and what you have seen in your family happening. So someone like me, a half kg physical gold is good enough. Someone would like to go for 3 or 4 kgs of gold. India kamal ki jagah bhai. So keep that much amount of physical gold, not more. As much as your women will tell you that, you know, it's always bankable during emergency times, sorry, I haven't seen anybody selling their gold in last 100 years. Sorry, last 48 years. They just buy, they never sell, right? So invest in gold, virtual gold stocks, which are backed by physical gold as much as possible, right? So all, everything, like health is something which you know that you have to maintain your health, right? Similarly, have a similar goal in wealth where you have to maintain your wealth. And when I say you have to maintain your wealth, it means after you stop working, or if you're in business, after you hand over your business to your son or to your daughter to take care of it, you still should have enough balance so that you will be able to sustain your wealth, which means sustain your expenses, sustain your lifestyle, even when the primary source of income has stopped. That should be your goal. Now, once you have made that goal, imagine if you are retiring. Say, I can take my example for those who are shy to share their goal. If I am say retiring in 17 years, my goal will be an X amount in the investment portfolio when I am retiring. And now that I have 17 years, I will not blindly keep investing and not keep track of it. For me, every December is the time when I look back and I rebalance. December because it's Singapore. If it's India, you should be doing it in March or February, wherever your financial year ends. So you should be able to look at your portfolio, check where you should have been, identify where you are. Uh, if you are plus, what do you want to do? If you're minus, is there any course correction you want to do? If there are certain sections of your portfolio that are suffering, would you want to invest more in that? Is there any particular stock or a sector where the structurally a change has come in and you would believe that the story will be different than what you had when you entered the stock or start consolidating those is? So those are the things that I do when I rebalance every year. There have been cases where I have booked my losses. Earlier I was very afraid of booking my losses, but now that I know that I have say 30 or 40 stocks in my portfolio, if I'm booking profit in some of the stocks, I'm not afraid of booking losses as well. Right. So, quick recap of what we have discussed. Health still is more important than wealth. Your relationships are still more important than your wealth. Just like when we talk about health, we believe that heart is the most important thing, or somebody who has seen people struggling from their digestive problems in their family, for them liver is the most important thing. Somebody who has seen in their family people struggling from urinary tracts, they will believe kidneys are the most important organ. But you know that all the organs are actually equally important for your health to be sustained, right? Similarly, in a relationships, as much as we believe that our parents are the most important relations, our kids are our most important relations, our spouse is the most important person, always believe that it's everybody who's equally important, right? Your work colleagues are important, your friends are important, your spouse is important, your kids are important, your parents are important, your siblings are important. Everybody is equally important and they have an equal place in the relationship circle. Similarly, when you talk about your wealth, as much as we want to focus on making a lot of money, there has to be a balance, there has to be a goal, you have to work towards the goal. Do not buy just because somebody recommended it. It's your decision because the money is yours to make. I, for one, sometimes because I do not have time to do a lot of analysis, I have subscribed to some trusted advisors who keep messaging me about if something is ready to be bought or something is story changed and we want to sell it. So my job is my primary source of income. I would love to put as much energy and focus and passion into doing it the best way I can. And when time permits, I would like to dwell into investments. But because investments are equally important when I would retire, I have taken support from the trusted investors who are into long term, because I am very aggressive when it comes to intraday and swings. That's why I have taken the help of an expert who is expert in long term investments. Right, real estate. I could not focus so much, and now given that I only have 15 to 17 years, I'm not sure if I would dwell into investments in real estate. But yeah, gold, stocks, structured products, they're all there. Have been planning, right? Coming to feedback and comments, I have spoken to some of my friends who say that it's very easy to recommend or suggest something or create a podcast when you have achieved a goal, right? So, as I said earlier, from a health perspective, it's only been 1 year that I have achieved my goal. Last year, July was when I started. So before that, yes, I was healthy to in extent that I would go for a jog. Running has been my hobby since the day I have landed in Singapore. So I do run, but running doesn't mean that I was healthy. I had a lump sum amount of fat in my tummy, and in my face altogether. So it's been only how many 10 months that I have seriously invested in my health, and I could start seeing returns only from last 3 months. Before that it was difficult. It takes a lot of discipline, but yes, I have achieved it. But again, if you have any specific issue which you do not want to put a comment, or you can always reach out to me over WhatsApp or message me, call me. I'll be happy to help you in whichever area you are having an issue. uh, if you really want me to come along with you in a journey, so somebody was like 68 kilos, and he was telling me that, why don't you become 68 and then together we will come to 58. I'm okay to do that. So far you pay me for that because I've worked very hard. I won't let it go free of charge, right? As much as a close friend you are to me, not doing that, bro, right? So, but yeah, open for advices, suggestions. If you really want me to do that, if you are ready to pay me, I'm all ears, and I'm all yours, right? So where we could tackle the problem together, right? Anything else, feel free to reach out to me. If there is any specific topic you want me to cover, please feel free to let me know. Would love to be more regular, at least once a week, as I had told you earlier. This travels once in a while, there will be a blip, but yeah, next 2-3 weeks I more certain to drop in episodes. And then let's see, live your life. Ciao.